What if I told you that SoFi is quietly being watched by some of the biggest players on Wall Street? And right now, beneath all the noise of the broader market, there are signals that something significant might be brewing. While today might have looked like a slow day on the surface, the data tells a different story. SoFi might be setting the stage for a major move, and in this video, we'll break down exactly what happened, what it means, and why you should care. Hello everyone! Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's begin with SoFi's performance in the latest trading session. On the face of it, the stock closed slightly lower, just a 0.37% drop. Nothing dramatic. The day's trading range was also narrow, between a low of 21.02 and a high of 21.56. But what stood out wasn't the price, it was the volume and the type of trades taking place. Around 36.4 million shares exchanged hands today, which is notably lower than the average. Yet what's important here is that a large portion of this volume wasn't from algorithmic trading. It came from institutional activity, which usually carries more weight in terms of long-term outlook. As the market neared its close, multiple large-scale transactions were recorded. There were buys of 1.4 million, 9.1 million, 1.2 million, and even 2.6 million shares, all taking place close to the end of the session. These weren't retail investors. These were major financial entities positioning themselves with purpose. Both on the regular exchanges and in the dark pool, institutions were quietly accumulating SoFi stock. And if that wasn't enough of a clue, a 13G SEC filing dropped after market hours. The form revealed that Jane Street, a prominent institutional trading firm, had acquired 65 million shares of SoFi. This suggests they likely capitalized on a recent share issuance, seeing long-term value at the current price levels. When large institutions step in and grab tens of millions of shares, it's rarely by accident. It's a calculated decision. Interestingly, though, not all institutions were buying. One large transaction, valued at nearly $6.93 million, appears to have sparked a sell-off during the session. It's unclear why this sell order happened, but it did briefly push the stock down. Despite that, SoFi has been showing signs of after-hours strength, likely buoyed by broader market movements and post-earnings reactions across the financial sector. Now let's talk about what's happening behind the scenes. Despite the quiet day, there was a flurry of large trades valued over $100,000. These include blocks worth $2.2 million, $8.5 million, $10.4 million, $13.2 million, and more. These are significant, and even near the end of the session, new block trades were being registered. The presence of these transactions suggests steady institutional involvement, even on seemingly slow days. In terms of broader market conditions, there was no major macroeconomic news, no political shocks, and no updates on tariffs or policies. Even figures like Trump, who often influence investor sentiment, remained silent. For once, the market had a rare moment of calm, and sometimes that's when the real moves begin to take shape. When we look at short interest, some intriguing details emerge. Today, short sellers returned about 160,000 shares, decreasing the overall short interest to around 10.22% of the float, or approximately 119.1 million shares. This kind of short covering could be a sign that even the bears are starting to back off, especially if they sense that institutional demand is growing or that a potential catalyst is on the horizon. Speaking of catalysts, let's discuss something that could be huge for SoFi: potential inclusion in the S&P 500. There's growing speculation that SoFi may finally get added to the index. If that happens, it would create a wave of forced institutional buying, as index tracking funds would be required to add SoFi to their portfolios. That kind of demand injection could provide significant upward pressure on the stock. And even if the announcement doesn't come immediately, The next potential window for inclusion is around mid to late September. The mere expectation of this could be a key reason behind some of the recent accumulation and short covering. Now, switching over to the options market, we saw some interesting developments. There were $15 million worth of call options and $6.7 million in puts traded today. These figures are a bit lower than usual, indicating a more cautious tone. However, looking closer, 36% of all option trades lean bearish. One notable cluster of trades occurred between 11:05 and 11:10 a.m., totaling $3.1 million in premiums. Among them were two major trades: a $15 strike put expiring January 2027 with a $2.12 million premium, and a $10 put for the same expiry with $750,000 in premiums. While these trades were marked as neutral, meaning it's unclear whether they were buys or sells, the size and length of the expiry suggest these could very well be put sells, which often signal bullish sentiment or expectations that the price will remain above those levels. Looking ahead, bulls are hoping to see the stock push toward the $22.50 range by the end of the week. On the other hand, bears are betting on a dip below $21. With the stock closing around $21.46, it's sitting at a crucial inflection point. The upcoming sessions will be critical in determining whether momentum shifts in favor of buyers or sellers. On the technical side, SoFi is still below the adaptive long-term moving average, currently around $21.67. Breaking above that level would be a bullish signal, indicating a potential trend expansion. If it remains below, we could see continued consolidation. That said, it is still trading above other key moving averages, which indicates that the broader uptrend remains intact. The stochastic RSI also signals that the stock is in oversold territory. This means a small dose of positive news, whether it's a new analyst upgrade, unexpected earnings, or even S&P 500 speculation, could trigger a quick upward move. Speaking of analyst opinions, there were no fresh updates today. Previous days saw a range of outlooks: a $14 sell rating from one firm and a $23 hold rating from Truist, whose analyst has a 43% success rate. These kinds of mixed signals can create uncertainty, but they also open the door for surprise moves in either direction. From a charting perspective, SoFi is holding firm between support and resistance lines mapped on the one-day chart. The next resistance sits at $21.68, which, if breached, could pave the way toward $24, a level that has seen previous seller activity. Lastly, from a macroeconomic angle, the market seems to be entering a relatively calm period. Most of the large-cap companies that influence broader trends have already reported earnings. With less noise, individual stories, like SoFi's potential S&P 500 inclusion, might get more attention from investors. In summary, while today looked quiet on the surface, the data reveals a different picture. Institutional interest is rising. Shorts are quietly retreating, and speculation is growing about a major catalyst that could reshape SoFi's trajectory. Whether it happens this week or next month, one thing is becoming increasingly clear: SoFi isn't standing still, and neither should your attention. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.